I'm taking some time to record this video because I want to address some of the frustration that I know a lot of Schiff Gold customers have been feeling with regard to the gold and silver. After all, as I'm recording this video, the price of gold is around $1,850 an ounce. The price of silver is around $22 per ounce. And I know many of us, myself included, had expected those prices to be much higher by now, especially given what's happening with inflation. After all, inflation is all anybody is talking about. It is now the biggest problem confronting the nation. You can't turn on the news without hearing a story about inflation. All of the companies that are coming out with bad earnings, they're not really blaming it on COVID or Putin, they're blaming it on inflation. Now, of course, our leaders in government and the Fed, well, sure, they want to blame the inflation on Putin or COVID, but the reality is inflation is here. It is a major problem, and that's exactly what many of us who have been buying precious metals were expecting all along. And what's very frustrating is now that we've been proven right, we bet on inflation. We bet on inflation by buying gold and silver. We bet right. All the people that said there was no inflation to worry about, they were wrong. Yet it's very frustrating that even though we were right, we're not getting rewarded for being right in the price of our gold and silver that should be much higher. Well, first of all, let me start out by saying inflation isn't new. Just because a lot of people are finally talking about inflation, that doesn't mean that inflation has suddenly appeared and it was missing in action all this time. Inflation has been with us for over a decade. I mean, it's been with us for many decades, but in particular, starting with the 2008 financial crisis, when the Federal Reserve responded to that crisis with quantitative easing, that was inflation. So we've been experiencing inflation under the guise of quantitative easing, because quantitative easing is simply a euphemism for inflation. The government didn't want to admit that its policy response to the Great Recession was to create inflation, so it named inflation quantitative easing, which sounded like it was a good thing or a smart thing. It was a way to dress up a really bad thing. Now, what happened early on with inflation, and the reason that nobody really cared about it, was the way the inflation entered our economy and the financial system. The greatest impact was on financial assets. Stock prices went up, bond prices went up, real estate prices went up, a lot of asset prices went up, and when that happened, a lot of Americans who owned those assets felt richer, and therefore they weren't upset that the cost of living was also going up because their wealth was going up a lot faster, at least on paper. But also the government was lying to the public about how much the cost of living was going up because it was reporting the increase through the CPI. And the way the CPI has been engineered, it really disguises a lot of the price increases. And so the public didn't realize how much prices were rising. I mean, they probably felt it, but they didn't see any official confirmation. And certainly investors didn't get that confirmation. They were looking at the CPI and they assumed that inflation was under control when beneath the surface it was actually breaking out. Now, what happened with COVID-19 kicked the inflation into a whole new gear because the policy response to COVID was to create even more inflation after COVID than had been created before. QE4 was actually bigger than 1, 2, and 3 combined, which is something I was warning for years. I was telling people that when the Fed did do QE4, that it would be bigger than the first 3 combined, and it was. And in fact, when they do QE5, which they are going to do, it will be bigger than the first 4 QEs combined. But what happened with COVID, we sent inflation into a whole new gear because while we cranked up the printing presses like never before, we basically ordered people to stop working. We told people to go home and not produce goods and services, but just cash government checks. We wanted to replace the lost incomes with a printing press. So people weren't earning money anymore, but the Federal Reserve was printing money so that people could buy things that they were no longer producing. So it was a perfect storm of inflation, and I warned about it from the very beginning. When most people were talking about how COVID was deflationary, I explained that it would have been deflationary had the Federal Reserve and the U.S. government done the right thing and contracted money supply so that demand would fall along with supply. Instead, we did the opposite of what we should have done. We cranked up the money supply. We stimulated the economy. Even though the economy was producing less goods and services, we printed more money to buy a diminished supply of goods and services. And I predicted that we would see massive increases in consumer prices, and that's what's happening. And in fact, this is just the beginning. But the question that everybody is asking is, why isn't the price of gold and silver reacting to all this inflation? After all, at times, it feels like the price of everything is going up, going way up, except gold and silver, which doesn't make sense because gold and silver should be particularly sensitive not only to today's inflation, but to tomorrow's inflation, because gold is here forever. And so what gold can do is take all of the future expectations of inflation and represent them today in today's price of gold. Gold can discount all that future inflation. And that is the problem, because even though we have a lot of inflation today, investors still think we won't have inflation tomorrow. That is the real key. Yes, we have a lot of inflation, but investors are still not worried about inflation. Why? Because the Federal Reserve is promising to solve the problem. The Federal Reserve is telling the markets that inflation is going to go away, that the Federal Reserve has the tools to put this genie right back in the bottle before it does any real damage. And so don't worry, Jerome Powell and all his comrades are on the job, and they're going to make sure that inflation comes right back down to 2%. So don't worry about it. You don't need to go out and buy some gold and silver to hedge yourself against future inflation, because there won't be any, because the Fed's going to get rid of it. That is what the markets believe. And so rather than fearing inflation, they're fearing the fight against inflation. Because how is the Fed going to fight inflation? It's going to jack up interest rates. It's going to have a tight monetary policy. In fact, it's even going to start shrinking the balance sheet. It's going to start taking money out of circulation, quantitative tightening. It's going to reverse all that inflation. It's going to suck up that liquidity. And that is what is scaring investors out of buying gold and silver. They still have confidence in the Federal Reserve. Well, that confidence is going to be lost. I don't know why people still have confidence in the Fed, given how the Fed has gotten everything wrong, but I think this might be the last time they've really pushed the envelope when it comes to confidence. Because if you go back to the beginning of this, the financial crisis of 2008, what did the Federal Reserve assure the public early on, back in 2007? The Fed said, don't worry about subprime. That's contained. It's no big deal. It's nothing. And they even said that if the housing market were to go down, which was something that they didn't expect, but they said the U.S. economy was so strong that even if housing prices went down, it wouldn't matter. The economy would just shrug it off. Well, of course, the Federal Reserve couldn't have been more wrong about that financial crisis coming or the Great Recession. Because if you recall, in the summer of 2008, when we were already in the worst recession since the Great Depression, because that Great Recession started in December of 2007, the Fed said that not only was the economy strong, but there was no recession anywhere in sight, even though we were already in the middle of one. So the Fed completely got that wrong. But then more recently, when it comes to inflation, what did the Fed initially say? Inflation is not a concern. There is no inflation. In fact, the Fed was saying the problem was that we didn't have enough inflation, that we had an absence of inflation, and we needed more. And then when inflation really reared its head last year, the Fed said, oh, don't worry about these price increases because they're transitory. And they repeated that transitory line for the balance of 2021. And then it wasn't until later in the year that they finally acknowledged that they were wrong and that inflation wasn't transitory. But then they still didn't do anything to correct their mistakes. They continued to print money. They continued to hold interest rates at zero until into 2022, and then they finally started inching up interest rates. Although they're talking about raising them some more, they still haven't shrunk the balance sheet. They're talking about starting that in June, but they really haven't done it yet. So the inflation fire continues to get hotter and hotter while they're pretending they're going to put it out. But if you look at the Fed's hawkish talk, and again, nothing is hawkish, it's maybe less dovish, but if you look at what Powell is saying, all of the Fed's willingness to do what it takes to fight inflation, it's all predicated, in fact, conditioned on how strong the U.S. economy is. Because Powell is out there saying that we will fight inflation because the U.S. economy is strong enough to withstand it. So it's not going to be like 1980 when Paul Volcker pushed the economy into recession by raising interest rates. This economy is so strong, this labor market is so hot that we could raise interest rates and fight inflation and it's not going to hurt the economy. That is completely wrong. In fact, we may already be in a recession. Just like we were in 2008 and the Fed didn't know it, we may already be in a recession in 2022 and the Fed doesn't know it, because simply raising interest rates to 1% from zero may have been enough to start the recession. It certainly was enough to start a bear market in stocks, particularly in tech stocks and these high growth stocks. And in fact, one of the reasons that Powell thinks the economy is so strong is that he's looking at the low unemployment rate. But unemployment is a lagging indicator. I think we are on the verge of a major increase in the unemployment rate, the opposite of what Powell expects. And so I think that when the Fed ultimately has to admit again that it was wrong on the U.S. economy and it overestimated the strength of the economy, just like it underestimated inflation, the Fed is going to lose its credibility, because the Fed is going to turn its attention to rising unemployment and a weakening economy and stop focusing on inflation. In fact, initially, what Powell is going to claim is that the unexpected weakness in the economy and the increase in unemployment, much of that is the result of inflation. If you look at all these companies, particularly retailers, that are missing their earnings, why are they missing their earnings? Because their customers are too broke to buy their products. They're spending too much money on food, on energy, on rent, on insurance. They don't have anything left over to buy a lot of these products, and so companies are losing sales, and the next thing they're going to be shedding workers. And a lot of these tech companies that have been losing money, they've been able to pay their workers because they were able to sell stock to investors. They can't do that anymore, so now they can't afford to pay their workers. And a lot of these workers, of course, were being paid with stock options. The stocks have crashed, so a lot of that wealth has gone. In fact, a lot of people who got caught up in the crypto bubble, a lot of their wealth is evaporating, and a lot of those people are going to be unemployed. So as the Fed is proven wrong once again on its belief that we had this super strong economy, when it ends up in recession or near recession, the Fed's going to claim that the recession in and of itself is going to solve the inflation problem, that the Fed no longer has to be aggressive with rate hikes or quantitative tightening because this red-hot economy has now cooled off. And since they attribute inflation to economic growth, they assume that the inflation will go away when the growth goes away. But inflation is about the growth of the money supply, not the growth of the economy. In fact, a real growing economy helps keep prices down because a growing economy produces more stuff. You have more supply, and so that can keep prices down. What's going to happen in this recession is inflation is going to get worse because the budget deficits are going to skyrocket, and now the Federal Reserve is going to have to print even more money to monetize them. The Fed's balance sheet is going to explode, and then the cost of living is going to keep going up because all that inflation that started out in financial assets has now permanently migrated into consumer goods. All inflations, no matter where they begin, they ultimately end up in consumer prices. So this is not a temporary situation. This is permanent. Inflation is going to get much, much worse, but the economy is going to get weaker it's stagflation, or as I've been calling it, an inflationary depression. And when the markets come to terms with this reality that inflation is not only here to stay, it's going to get worse, and the Fed's not going to be able to do anything about it. In fact, everything the Fed does will make it worse. That's when everybody is going to come rushing into gold and silver. Now, I think the stampede will start before that revelation, because I think at some point soon, either the Fed's going to have to start backtracking on its tightening, it's going to have to do some sort of pivot, or the markets are going to figure out on their own without being told that the Fed is going to pivot based on a preponderance of much weaker than expected economic data that I believe is going to continue. But before that happens, I think it's important that people, A, not give up on the gold and silver that they already own. Don't think, oh, it's not working out, so I need to sell my gold and silver. That would be the worst thing that you could do. But what you should do is recognize the opportunity to continue to buy more while so many other investors are clueless as to what is actually going on with inflation. That is the opportunity. And when gold and silver prices start to move, I think they're going to move up in a spectacular fashion. I think we're going to see major moves. We're going to see gold moving up, not just $50 in a day, but $100 in a day, $200 a day. We can see silver start to move $1 at a time, $2 at a time, maybe $5 moves. I think when these big moves really start, a lot of people are going to be too afraid to buy. They're going to be worried that they're going to buy at peak and that it's going to pull back. It's going to be difficult to buy into that hot of a market. The time to buy is now. Before that happens, before everybody figures this out and starts rushing in to buy gold and silver, you can buy now while they're still giving these metals away, because they still don't believe inflation is a problem. Well, just like they thought it was transitory, they're about to find out that it's permanent, that it's not going to go away based on Fed policy. And in fact, even if you look at what Powell is promising to do to fight inflation, he's only talking about raising interest rates to maybe 2.5%, 3%. Inflation is 8%, even if you believe the government numbers. If you don't, if you use real numbers, it's at least double that. How can you fight 8% inflation, let alone 15 or 16% inflation with a 2%, 3% interest rates? In fact, the economy collapsed in the fourth quarter of 2018 when the Fed raised rates up to about 2.5%. We didn't have anywhere near the debt then that we have now, and inflation was still under 2% the way it's officially measured. So how could the Fed get rid of inflation now with interest rates that low? In fact, years ago, a 2 or 3% interest rate would have been considered stimulative. How are you going to use a rate that is historically stimulative to fight historically high inflation? That's what people still don't understand, that everything the Fed is talking about doing is inadequate for the job that they want to do. If the Fed really wanted to fight inflation, interest rates would have to go much higher. We'd have to have positive real interest rates like we had in 1980 when Paul Volcker put interest rates up at 20% when the CPI was no higher than 13.5%. And that was an honest CPI, unlike the CPI we have today. There is no way the Fed could actually do what it takes to fight inflation now. So all it can do is talk about fighting inflation, but what it's talking about doing is inadequate. But while these rate hikes are not nearly enough to fight inflation, they are enough to prick the bubble in the economy. They are enough to cause stocks to go into a bear market. In fact, they are enough to create a financial crisis, because we have so much debt that these higher rates may not be high enough to fight inflation, but they're too high for the debtors to be able to afford to service their debt. And the biggest problem with an inflation fight is all the money the government is going to have to print, or the Federal Reserve is going to have to print, to finance the exploding deficits in the next recession. I mean, they're already $3 trillion approximately, and we're not even in recession, at least officially. We still have low unemployment, but when we go into the next recession, or this recession gets worse, the Federal Reserve is likely to crank up those printing presses to pay for all the government stimulus, because we don't have the political will to increase taxes on the middle class, which I think would be a mistake. I think the better policy would be to slash government spending on entitlements and defense and all the money that we've been spending, but nobody wants to do that either. I mean, we couldn't even reduce government spending when Donald Trump was president and the Republicans held both houses of Congress. Government spending continued to increase. So if we couldn't cut government spending when the people in charge were supposedly the fiscally responsible party that doesn't like government spending, how are we going to cut government spending now when we have a Democratic president and a Democratic-controlled Congress? I mean, even if the Republicans take back that Congress in the midterms, we're not going to have a consensus for cutting government spending. We're only going to have a consensus for kicking the can down the road and passing that baton to the Fed, and the Fed is going to print a lot of money. In fact, if you listen to what Jerome Powell has been saying with respect to why he admires Paul Volcker, he's never said he admired Paul Volcker because he raised interest rates really high and was willing to put the economy into a severe recession to fight inflation. Powell has restricted his admiration to Volcker by saying he admires Volcker because Volcker did what he thought was right. That's it. Well, we have no idea what Powell thinks is right. In fact, I think Powell would rather fight recession and unemployment than inflation. In fact, I think Powell believes that high inflation is an acceptable trade-off to stimulate the economy. I think he's only willing to fight inflation to the extent that he believes he can do it without hurting the economy. But once he realizes he can't, he's going to give up the inflation ghost and go right back to economic